Hi, my name is Jim from CostSeg America. I'd like to talk to you about the new commercial property that you recently purchased and show you how an IRS-approved tax savings gem can put tens of thousands or even hundreds of thousands of dollars back in your pocket this year. What would you do with an extra $50,000, $100,000, $500,000, or even $1 million in your pocket? Would that be a game changer in your business? Smart commercial real estate owners like you and Fortune 500 companies have learned to take advantage of a simple process called cost segregation, which significantly reduces or even eliminates current federal income taxes, especially in the first year of ownership. You might be asking yourself, what does the IRS say about cost segregation? They say that cost segregation is a lucrative tax strategy that should be used in almost every purchase of commercial real estate. The benefit of cost segregation is an immediate increase in cash flow and a significant reduction in current federal tax liability. And by the way, a cost segregation study will not increase your chances of getting audited. Cost segregation allows commercial properties or residential rental properties, whether new or existing, to depreciate faster than traditional straight-line depreciation. Our team suggests performing cost segregation on properties that are acquired or built in the last 10 years. Yes, the last 10 years. It's not just for newly acquired properties. Traditionally, CPAs use straight-line depreciation of 39 years on their clients' commercial buildings, or 27.5 years on apartment complexes. But through the IRS guidelines of cost segregation, certain components which were previously classified with a 39-year life or 27.5-year life can now be classified as personal property or land improvements by applying a 5, 7, or 15-year depreciable life. Examples of some of these accelerated components would include certain decorative lighting, flooring, electrical outlets, and demountable partitions. What does this ultimately mean? It means money back in your pocket now rather than later. Here are a few examples that demonstrate the power of cost segregation. Let's look at a strip mall in Florida. The cost basis of this building is $6,885,000. Through a cost segregation study, my team at CostSeg America was able to accelerate 37% of the building in the first year. That's roughly $2,500,000 in additional current year depreciation on your federal income taxes. What does that translate into money in your pocket? That's $925,000 in additional cash flow. Talk about hitting the jackpot. Here's another example of how cost segregation was a game changer for one of our clients. Our client owned an office building in New York State. The cost basis was $1,157,962. Using cost segregation on this office building, my team was able to accelerate 33% of this building. That resulted in $379,700 in accelerated depreciation on the client's federal income taxes, which translates to $140,400 in additional cash flow. She was one happy camper. At this point, you may be wondering, can my CPA do a cost segregation study? No, they cannot, because they do not have the engineering expertise necessary to accurately break out all of the structural components that are considered in a cost segregation study. The CostSeg America team works as a strategic partner with CPAs. We enhance their business by providing them with the exact cost segregation information so they can give their clients the best possible tax benefit allowed by law. CostSeg America has long-standing relationships with hundreds of CPAs across the country. I just wanted to inform you that not all cost segregation companies are alike. So who's the right cost segregation company for you? For over 2 decades, the experts at CostSeg America are the team you can trust to perform a fully engineered and accounted study. CostSeg America gives a value to every component of a building, even the components that don't qualify for cost segregation. This is important to know because it means CostSeg America is not cherry-picking qualifying components or leaving cash on the table as a typical competitor residual study or modeling study. In fact, CostSeg America finds clients an additional 6% to 15% more in tax deductions than other cost segregation firms in the business because of our attention to detail. This is tens of thousands and even hundreds of thousands more in accelerated depreciation. Methodology matters, and so does engineering expertise. CostSeg America has conducted over 15,000 studies nationwide. We have a perfect record with the IRS, and we take pride in our white-glove customer service while saving our clients hundreds of millions of dollars. To get started, call Jim and his team at 1-888-865-4401 or email Jim at jim@costsegamerica.com to learn about this cost segregation secret and use it to your benefit.